Hey everybody, Carl from daytradetowin.com here. So this will be a series of videos about price action, and you will learn how to trade using price action instead of using indicators. When you browse through the web looking for information on day trading, you will very often come across pages or videos with charts that look something like this or this. But when you see charts like this, you can be sure that almost always the trader who uses these types of charts are just trying to overcompensate for his lack of confidence in his analysis, or simply put, that he doesn't know what he's doing. He's probably not very successful. Now, I don't like to badmouth other people, but this is my strong belief, because I speak from personal experience. I started with trading and chart analysis back in 1995. By the way, I still remember how I learned about day trading, and I still remember my very first trade. Anyway, when I started out, I also thought that I needed to use charts like that with many different indicators that would tell me if there was a trend and if the trend was strong, when the trend was going to end, when it would lose steam. I would also be worried about one indicator not giving me the correct outlook, so I would use another indicator that would confirm or reject the first one, and so on. Pretty stupid, but hey, that's easy to say in hindsight. Well, in a discussion I had some years later with an experienced trader who would later be my trading mentor, I asked him how I could become as successful as he was. Well, the answer I got was kind of strange to me at the time, and to be honest, I really didn't understand the implications it would have on my trading back then. But what he said was, the first thing you need to do is to remove every indicator that you have in your chart. I was like, what? How would I be able to find any trades without indicators? Without the MACDs, without the RSIs, without the moving averages, stochastics, Bollinger Bands, and so on. But I wanted to become successful, so I took his advice, because I really wanted to become a successful day trader. And I got rid of everything except open, high, low, close bar charts, looking like this. And I would also read volume in the charts, like the bars you have here at the bottom. Now, most traders nowadays would use candlestick charts, looking like this. But I use the open, high, low, close bars personally. They tell me basically the same thing, but the candlestick charts can actually provide a bit more information that you usually don't have with the bar charts. In this chart you don't see them, but you can have these hollow candlesticks versus the solid ones. But it doesn't matter, you can be successful with open, high, low, close bars, and you can be successful with candlesticks. But if I would begin day trading today, I would probably pick candlesticks. But I'm just used to the open, high, low, close bars after having looked at them for about 25 years now. Anyway, looking at those naked charts without any indicator, at first it was a bit intimidating. I did not really understand what I was looking at. But as time went on, I started to see details that I did not get a chance to see when I was just looking at the indicators and those moving lines. So instead of looking at the short-term moving average that I was using to smoothen out the way the price behaved day to day or minute to minute, I started looking at the bars themselves, at price itself. I started looking at volume, and I realized something that I had not noticed before: how the trading volume would increase, how it would spike, how it would diminish depending on what happened with the price. So there was definitely a relationship between price and volume. And I also noticed that there was something going on with the price bars themselves. Sometimes they would be very long, sometimes they would be very narrow. Sometimes the price bars would be huge and the volume would be huge at the same time. And sometimes the price bars would be very narrow, but the volume would be huge. So what was going on? The price bars, they could form a short trend, and the volume would increase for each bar until the volume spiked and there was a certain type of bar at the top that formed top of the trend or top of that wave. Then, after the price had consolidated for a while or pulled back for a while, the price bars again started forming a similar short-term trend, but it didn't get far this time. Looking at the volume, I could see that it did not increase the way it had done the previous time. So something was definitely up with the relationship between price and volume. And I became totally intrigued with this idea of only using price bars and volume instead of looking at numerous indicators and lines that basically did not show me any real intelligent thing at all. So the more I studied the charts, the more details I noticed. I could see different types of bars, different behavior of the volume. I could notice different stages of the market, uptrends, downtrends, sideways moves, all with their own distinct price action that would repeat every time you had an uptrend, every time you had a downtrend, every time you had a sideways move. So I knew I had struck gold. And there will be more on this topic next time. I will continue this series of price action analysis videos, so subscribe now and stay updated when the videos are released. And also remember to visit daytradetowin.com to see our day trading strategies that are totally based on price action. And a new mentorship class begins in 2 weeks, so make sure you sign up. See you in the next video. Bye bye.